Hello, this is Craig Brelsford with RedChip Companies. Thank you for joining today's event with GreenPower Motor Company, which trades on the Nasdaq under the ticker GP. With us today, we have Fraser Atkinson, Chief Executive Officer and Chairman of GreenPower Motor, Brendan Riley, President and Director, and Michael Seifert, Chief Financial Officer. We will begin with a brief presentation in a moment, and then we will answer your questions. Users may submit a question at any time. Click the Q&A button at the bottom of your Zoom window. Before we begin, allow me please to read the Safe Harbor Statement. This call may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management constitute forward-looking statements. Any statements that are not historical facts should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. I now turn this webinar over to the GreenPower team. Gentlemen, please go ahead.
Hey, Craig. My name is Fraser Atkinson, the CEO of GreenPower Motor Company. We'll dispense with our reading of the forward-looking statements, as Craig has already covered that. For those that are new to the GreenPower story, we design, manufacture, and distribute our own suite of purpose-built all-electric medium and heavy-duty zero-emission vehicles. Our strategy is focused around two primary markets, one being the school bus sector, and we'll get into more detail about the product offerings that we have in the marketplace for that sector, as well as the Class 4 medium-duty space. Our primary focus, though, within these two is within the school bus space due to both the money and the mandates that are driving each of those. We're well positioned to execute our strategy. We've already delivered over 700 of our Class 4 EV models. We are the only OEM EV with both a Class 4 Type A school bus, which is a smaller school bus, as well as the Class 8 Type D or heavy-duty school bus. And finally, we have a very robust order book in terms of having 197 live orders and contracts for school buses representing over $68 million of business today. As I mentioned, the drivers for this sector is money and mandates. And to take it back a step, what has driven the mandate side of this equation is that of all the different sectors that we're involved with, the deployment of electric school buses, in addition to reducing the GHG emissions and the overall footprint with zero-emission vehicles. This vehicle is replacing vehicles that have a decided impact on the health of the students that are being transported to school. What we mean by that is that these diesel-emitting school buses, they give rise to NOx emissions as well as particulate matter, specifically PM 2.5, which affect both the development of the lungs, especially in younger kids, and the PM 2.5 gets in the bloodstream of these children as well. So by reducing or eliminating the diesel-emitting school buses with battery electric or zero-emission school buses, we're providing a much better mode of transportation for these students. So as a result of this, there's advocacy groups that originated in a number of different locations, and New York was one of the early regions where the advocacy groups pushed for changes and the elimination of the diesel-emitting school buses. So New York was one of the first states that set a mandate to electrify or eliminate all of the ICE school buses and replace them with zero-emission school buses. And there's 50,000 in the state of New York. Other states follow, including ultimately California, where they have 30,000 school buses. So just between those two states, this represents an addressable market opportunity of over $25 billion over the next 8 to 9 years. Now, it's one thing to have a mandate or a requirement, but if there isn't the financial capacity or the ability for these organizations to make this change, then it becomes a rather hollow objective here. But in the case of both California and New York, there's significant funding that has been made available and continues to be available for the electrification of school buses. California, they have multiple number of programs. In particular, last year, there was the zero-emission school bus initiative with $500 million, as well as the annual school bus set aside with $130 million. And the majority of those deals will be contracts that will be executed over the next couple of years. So while the funding was made available in 2024, we as a company and the other participants in the programs won't really see the benefits of deploying the vehicles and getting paid for them through this year and well into the next year or two. So the funding that is in place has really set ourselves up for a significant level of deployment. And if I jump ahead in our presentation, I'm just going to briefly talk about where we sit presently. And we have live orders and contracts representing 197 different types of our school buses, which Brendan Riley will go through shortly, and representing over $68 million of business. To put this into context, our last full fiscal year, 2024, we delivered 41 school buses, and the prior year was 9. So 197 is a significant step up or forward from what we have done traditionally or historically. The other thing to note is that this encompasses a number of other states that I didn't mention in terms of the California and New York markets. So we are active in other areas and other regions where there is a significant support to electrify or adopt electric school buses. And lastly, in addition to this, we do have a significant active qualified pipeline that covers not just the states that we have live orders or contracts in, but a number of additional states that will broaden our geographic reach with our products. So with that, I'll turn it over to Brendan Riley, President of GreenPower Motor.
Thank you, Fraser. And good afternoon to you all on the call. It's really a distinct pleasure to be here today. My name is Brendan Riley, and I'm the president of GreenPower Motor Company, as well as a director. Fraser had mentioned previously the types of school buses that GreenPower makes. There's actually 4 types of school buses. There's actually subcategories, but of the types, there's 4 types: A, B, C, and D, which makes a lot of sense in the grand scheme of things. GreenPower makes 2 of the types. Our type A, which is that smaller bus that Fraser's talking about, that's on the cutaway chassis, with our body on the chassis itself, and the type D, which is also called a transit style school bus. It's the one with the flat nose, and is the largest of the school buses currently on the road today. Our type A is not only an award-winning bus, that platform has been Altoona tested and utilizes our EV Star cab chassis, or our EV Star cutaway, which is the vehicle we build a lot of other vehicles on that same platform, shares 90+% of the same components and parts, and is a platform that we've got one type of training, one service tech type for, and gives us a lot of flexibility. The Type D is built on our heavy-duty bare chassis. I've got an image of a Type D being built behind me. This is one that's being built in our West Virginia facility currently. And it's the largest of the school buses on the road today. Ours is specifically interesting in that it has the highest capacity of any school bus on the road today, and that's of 90 students plus a driver. If you look at these two, they are very distinctive. They're very modern, and they utilize our aluminum bodies. Both use the same body structure. The Type A is just smaller. And both of these vehicles have followed all of the prescribed requirements and certifications for FMVSS, Colorado rack, Kentucky pole, side intrusion, all of the tests that are required. So the vehicles have gone through all the prescribed safety standards that are both federal and then local. On top of that, if you look at our Beast, that vehicle's actually, the passengers are sitting above the impact zone on that vehicle, which we believe adds another level of safety, where the students are actually sitting well above where a vehicle would have side impact. Both the vehicles are compelling in other ways besides being zero emission and started their lives as zero emission vehicles. They're not a converted vehicle like a lot of our competitors have, where they take their diesel vehicle and had it converted to an electric vehicle at a later date. The Type D has full pass-through luggage, and we have a Mega Beast that has almost 400 kilowatt hours of batteries on board, which gives it a range of 300 miles, which really opens it up to absolutely every school district in the country that has high range requirements. The other beauty of our Mega Beast and what sets it apart is that it has all this power. If you don't need it for the range or for your band or your sports trips, what have you, it also is a great product for vehicle to grid integration because it has so much storage on board, has typically double of what your average big heavy duty school bus would have. Makes it a much more compelling product for V2G applications. Next slide, please. So Fraser was talking about the various places where we sell vehicles, and on this competitive landscape you see here, this has got our two product offerings. The Nano Beast is on the top, that's our small bus, and the Beast is on the bottom, that's our big bus. But also shows where these vehicles have various incentives that they're eligible for on it. So if you look at the competitive landscape, where GreenPower might have 4, maybe 5 competitors that are EV products, we happen to be the only Class 4 vehicle that's purpose-built, is on the California HVIP program, is on the New York State bus contract, and it has, again, a very meaningful range, 140 to 150 miles. Again, it has rooftop heating and air conditioning, which is compelling in all weather types. And again, uses our aluminum body, heavy duty body, which we consider the finest body on any school bus on the market today. And then our Type D or Class 8, it's called the transit style school bus. We've had 3 competitors on here. One of them is unfortunately no longer with us, which is Lion on the right. But if you look at Bluebird and BYD, who currently offer Type D school buses, only ours and BYD's are purpose-built, and GreenPower has the highest seated capacity and has the biggest battery available for range. Again, compelling products, and we consider best in class. Next slide, please. Or 2 slides ahead. I mentioned earlier about our Nano Beast being on our EV Star platform. So our EV Star platform is our medium duty electrification strategy, where GreenPower, we looked at what was available in the market and really what we could build for the market. And when we did the math of payload and range and had those next to each other, we really saw this class as being the most significant, the most compelling to electrify. You're talking about, a little bit bigger than a car, but essentially a car-sized battery, so you can scale it up and have a fleet of these without, having all these high power chargers. You can easily charge these level 2 chargers and live perfectly happily. So charging infrastructure is inexpensive, ubiquitous, and it does not require a lot of power to get started. The payload is significant and the batteries are significant. So meaningful range, meaningful payload. And what does that, when I first got into the commercial EV space, especially when it came to trucks, we had a saying: you were either moving payload or you're moving batteries. You're not moving both. And with our class 4, you really get to move both. You get meaningful range. It's a mid-mile vehicle, and you get industry-leading payload. And this fungible platform, this EV Star platform, is what we use for many vehicles, and you'll see it coming up in the next slide. But again, parts uniformity, training uniformity, manufacturing simplicity, dealers and their ability to sell them. They know the product inside and out because it's the same product essentially across many different platforms, many different segments, and you'll see that on the next slide. Next slide, please. So here's the fungibility of the EV Star product line, which makes it very compelling for us and hopefully you, the investor, in seeing what our approach was. The EV Star product line is composed of essentially the same vehicle with slightly different body features. So the EV Star is our Nano Beast, it's our Mobility Plus, it's our EV Star passenger van on the people transportation side. And then on the good movement side, it's the cargo van, stake bed, utility bed, all the different types of bodies on it, and even some vocational bodies, and our refrigerated and dry freight box. So all these different products are made with one vehicle, one type, and again, very compelling system. From our perspective, it's also allowed us to build a lot of these vehicles and build a very strong reputation with repeat customers coming back. They have the vehicle, they've got the training, it's a known quantity, they're pleased with it, and it just works on many different levels. The next slide, please. There we go. So the U.S. commercial EV market, Fraser mentioned it earlier, has to do with money and mandates. So California and CARB really developed the Advanced Clean Truck Rule, which requires the state of California 75% of all the Class 4 to Class 8 vehicles that are purchased to be zero or near zero emission. It really means zero emission by the year 2035. So by 2035, 75% of all new purchases need to be zero emissions. This rule has strong specifics. It even takes into account the air conditioning systems on the vehicles and all of the emissions that can come out of the air conditioning, the refrigerants leaking out in the environment, tire, everything. A very complex rule, and it's been adopted by 11 states. 18 states have joined the Zero Emissions Task Force, which targets 2050 for 100% of all new medium and heavy duty vehicles to be zero emissions. And this year, 2025, 10% of all the new Class 4 and Class 5 vehicles purchased by private fleet operators and state agencies need to be zero emissions or electric in this case, increasing to 2035 with public entities at even a higher adoption rate as that scales up. So we see, this is the mandate portion of things. There's a ton of mandates out for these vehicles. We anticipate the money to always be behind these mandates also. And at some point, as the price differential becomes closer and closer or less and less, the money will go away and the mandates will just be in place. Next slide, please. When you hear about GreenPower's manufacturing light approach, the purpose of us talking about it as being manufacturing light is that GreenPower leverages contract manufacturers around the world to really help us build our vehicles. We can do full assembly for our own vehicles here, but the business is a relatively lumpy business, and we know it's going to continue to be a relatively lumpy business. And if you build all this capacity and own all this capacity with all the overhead that comes with this capacity, and the business being lumpy as it is, it's extremely difficult to have enough internal capacity to deal with the spikes and the valleys of production. And as we see some of our very erudite competitors that were out there that have gone the way of the world, I would submit to you that a large portion of their demise could be linked to these excessive overhead costs. So, what are the difficulties of having this, manufacturing light approach? Well, one of them is maintaining quality and consistency in your production. And a previous job, I had a lot of exposure to some of the most complex and I would say compelling, manufacturing light, fabless semiconductor companies that had designs and products that they brought to market, but they would actually have them made for them. And how you were able to maintain quality, get a compelling product, all that stuff there's some well documented cases of how to do that. And I studied those carefully. And we have resident inspectors, employees at all of our contract manufacturers that are GreenPower employees that work for us, that are constantly driving quality, production, status, all that stuff. And also you need to have a product that is buildable in their various places. And that's a lot of our design is the fact that it's a product that can be assembled in multiple places in the world by skilled and semi-skilled workers. The other thing about the contract light issue, one of the issues is you pay a little bit more per piece because you're paying for your contract manufacturer's overhead, but you're only paying for it in that one discrete item, and you don't have this overhead that is ad infinitum, ticking and ticking and ticking. So it does take off a lot of pressure and allows us to deal with the realities of the world and the very lumpy nature of our business. Our California production, currently we have 2 U.S. production facilities now. Our California production facility includes final assembly, complete assembly, Buy America compliant assembly, final inspection, and all other things related to production. Our West Virginia provides the same with even more capacity. And again, it allows having this bi-coastal production capability with basically duplicated production capabilities. It allows us to actually address more local markets. Shipping is a killer. It can add, in some cases, 5 to 8% of the cost of the vehicle, shipping it around, completed vehicle. Also has a very poor carbon footprint, and does your shipping vehicles on either rail or on the road, which is using diesel almost any way you look at it. Not the most green, optically speaking, especially way to move around EVs. And also it gives us an ability to really build the vehicles and they're specified in the regions. So our East Coast vehicles are definitely a different flavor than our West Coast vehicles. So it really allows us to build these slightly variant vehicles differently. We also have our GreenPower truck body, GP truck body facility, which makes these compelling, lightweight reefer units and our stake side and things that we have specific to GreenPower or EVs, and mostly for our own EVs. That's been co-located now with our production facility. Used to be in the San Joaquin Valley. We've got the Riverside, which is the Inland Empire in the LA Basin now, where we've co-located our truck body, our GreenPower manufacturing for EVs, and then we also have our administrative team and our engineers all in one location. So West Virginia, California, very similar types and sizes of production, administration, engineering in little clusters. Next slide, please. And at this point, I'd like to turn it over to Michael Seifert.
Great. Thank you, Brendan.
My pleasure.
Good afternoon, everyone. My name is Michael Seifert. I'm the Chief Financial Officer of GreenPower Motor Company. I'm going to start today by going over our results for the 12 months ended March 31st, 2024, 2023, and 2022. So during our last 3 fiscal years, between 2022 and 2023, we saw an over 100% increase in revenue. This was on increasing vehicle deliveries from 93 to 299 in 2023. We had a similar level of revenue in 2024 of 39.3 million, and this was on fewer vehicle deliveries, 200 in 2022. The vehicle deliveries for the fiscal year 2024 were more heavily weighted towards our Type D school buses, so we had a higher number of those school buses delivered, which are at a higher revenue generated per unit sold. Another important thing to highlight on this slide is that consistently over the last 3 fiscal years, we've generated a positive gross profit. This is a differentiator between us and other EV manufacturers, and we will delve into this a little more on the following slide. We have generated a net loss, so we are not yet generating positive accounting profits. Our cash flow used in operations has improved over the last several years. This is largely the result of focusing on better inventory management and producing pursuant to customer orders. Earlier on, we had a strategy of producing inventory so that we had inventory on hand, which at the time was a differentiator and allowed us to win a number of sales just by virtue of the fact that we had vehicles available to deliver within a short time frame. We're now producing pursuant to customer orders, to better manage the costs of working capital and managing those costs. And moving to the next slide. So as I mentioned on the prior slide, and as Brendan alluded to when he was going through our manufacturing light approach, GreenPower is in a great company on the left-hand side of this chart with Tesla, in that we have generated a positive gross profit margin. So what we have here is our gross profit margin for the trailing 12 months ended December 31st, 2024. And as we described on the prior slide, this is something we've generated consistently over time. This compares very well to a number of startup EV manufacturers, which you can see on the right-hand side of the slide, all of whom generate consistently negative gross profit margins, which is not a sustainable business model long-term. Next slide, please. So moving to our capital structure, we have 29.5 million shares outstanding as of the current date, including exercisable stock options and warrants. On a fully diluted basis, we have 32.9 million shares outstanding. As of our most recent published quarter, this is December 31st, 2024, we had an operating demand loan for up to 6.2 million, which has been used to fund working capital, as well as interest-bearing debt totaling 7.5 million, with maturities ranging from within 12 months to over 2 years. As of December 31st, we had working capital of 12.8 million, which included 28.2 million of inventory. And within the interest-bearing debt that we described in the first bullet, We do have a revolving loan facility from EDC, that's Export Development Canada, which is an agency of the Government of Canada. This facility is for up to $5 million and has been used to finance production of electric vehicles. We had approximately $1.2 million available under this facility as of December 31st, 2024. And this has been a very useful and important source of capital for us as we're moving through our school bus order book. Next slide, please. So to summarize the highlights of what we went through today, GreenPower has built approximately 900 vehicles to date. We've generated over $90 million of revenue on 614 vehicles delivered in the past 3 fiscal years. We're one of only a few EV manufacturers in our sector that have consistently generated a positive gross profit margin on the vehicles that we sell. We're also the only EV OEM offering both Class 4 Type A electric school buses, as well as Class 8 Type D electric school buses. We've been awarded state contracts and orders in the states of California, Oregon, Nevada, New York, New Jersey, Arizona, West Virginia, and Missouri. We have current U.S. manufacturing located in South Charleston, West Virginia, and in Porterville, California. We have a significant order book for our flagship models, which is the EV Star platform, as well as both Nano Beast and Beast school buses. Finally, we have a management team with prior experience at a number of well-known vehicle companies, including BYD, Thor Trucks, Custom Coachworks, Mercedes-Benz, and others. These individuals have proven track records to successfully develop and commercially deploy new lines of electric vehicles. So that concludes our presentation. We'd now like to open it up for Q&A.
Just to dispense with an administrative question, this presentation will be available on our website in due course. Give us a few days and be posted up and available under our investors section on the GreenPower Motor Company website. First question, I'll direct this to Brendan. Where do things stand with production for the West Virginia school orders, presumably school bus orders? Do you have a timeline for when these deliveries will be completed?
Well, thank you, Fraser, for that question. Currently, we have delivered maybe 12 buses so far to the state. We do have a blend of state and federal buses going to West Virginia. So with that mix of different contracts that we're building to and building to, in some cases concurrently, I don't believe we've got an actual production end date, as some places are waiting for their infrastructure to be built, and we try not to deliver products before the infrastructure is all in. But as it stands right now, just to give you an idea, let's say there's somewhere in the neighborhood of 90 plus school buses left to be delivered to the state of West Virginia, blended. We're delivering currently 1 school bus a week on that for the state. We're going to be delivering in the next month or so 2 school buses per week. So, if the locations are ready to receive the buses, we should have a large percentage of these buses delivered before the end of this year.
Okay, the next question, and I'll start this, and Brendan, feel free to add any additional color commentation. Can you provide insight into how much of your current backlog is tied to EPA funding, and whether you anticipate additional orders coming through this program? So to give it some background, there have been a number of phases of the Clean School Bus program, which is being administered by the EPA program. And within each of the early ones, they had awards. The awards led to contracted arrangements with in some cases dealers, in other cases with school districts, and lastly with third parties. So there's been some initial deals that have been contracted between the EPA and those parties. The more recent ones, they have been subject to where if the contract wasn't completed and the funding hadn't been drawn down, those deals in some cases were subject to the freeze that was announced by the new administration, a couple of weeks ago. So we as an organization, when we looked at the Clean School Bus program right at the start, we felt that, it wasn't necessarily aligned with the mandates. If you recall at the beginning of our presentation, we talked about money and mandates. Well, the mandates are state-driven. So we felt that would be better aligned, focusing more on those efforts than the EPA that, if they had a change with the funding, it wouldn't necessarily be driven by anything to do with a federal mandate. So we really didn't have the same risk profile or the amount of deals tied up on the EPA side as some of the other companies that had really went all in on Clean School Bus EPA funding. So when we looked at the 197 that we talked about earlier in the presentation, the vast majority of those deals are not impacted in any way by EPA funding. So that would, Brendan, did you have anything else to add to that?
No, that was put very eloquently. And again, by design, and Fraser and Michael have a big influence on this. By design, we try not to have all our eggs in one basket, either in one state, one program, what have you, because those things can go away. And Fraser, exactly right. The majority of these deals are not tied to the federal EPA Clean School Bus program.
The next question, have you seen any Lion customers make inquiries? Don't some of those customers have funding? What do you think happens to the Joliet plant? I don't think we'll have time to answer all three questions at the same, and I'm not sure we have the same ability to answer what they may or may not do with the Joliet plant in Illinois, but they have issued some press releases announcing that it was on initially a pause, and more recently it sounds like they're ramping back on production at all through that region. In terms of customers making inquiries, if you recall, Brendan talked about the competitive landscape. We have the smaller type A and the larger type D. Interestingly enough, you may or may not have noted that the companies listed in for each of those two vehicles are a completely different set of companies. So all of the ones that we compete with on the type A, none of them have a D. And same thing, all the ones that we compete with on the D, none of them have type A. So any opportunities with Lion would exist solely with our type D, number one. Number two is that as we, to the extent that Lion had lined up funding through the EPA, and they did it directly, then the EPA contract, after it was awarded, would be between the EPA and Lion Electric. And any change with that, like a material change where the underlying party to that agreement is anticipated to be changed, those funds would go back into the pot and reassign based on a wait list. So there's less of an opportunity to chase a deal like that than, say, a deal that has lined up through a dealer or through some other third party, whether it's federal or state, where they are in a position to reallocate. So we've been very careful to not try and chase every potential or possible Lion deal that's out there, and just focus on those that the end parties can give effect to a change where it could be transferred to a GreenPower. Next question, how does GreenPower assess the current political and regulatory climate, particularly in terms of its impact on the EV industry and the company's growth trajectory? Are there specific policy risks that you're monitoring closely? Wow, that's this could be a whole. We could do a webinar probably just on this this set of questions. So
We do a series of webinars on this question.
could we ever? So just to start this off, whether we're dealing with the potential for tariffs that could impact on our ability to sell vehicles that are go through final production either in California or West Virginia, that if it was being shipped up to Canada, tariffs would impact on that flow of transactions. And likewise with tariffs in major regions that we interact with our supply chain, that tariffs that are introduced could impact on what we're doing. But we have taken a long view in developing a supply chain that has had where we've done our best to de-risk a lot of the elements within that supply chain. We've also, in terms of the regulatory requirements, there's Buy America, there's Made in America, there's Built in America. There's all kinds of different variations of what people sometimes equate in different ways as being the same thing that mean different things. And that, Buy America has a specific content requirement of the value of what you push through on your production side to produce a product that meets that criteria. It's something that's essentially only required in the transit space due to its nature of funding for the end customers. So as a result, it's something that if you're operating in that area, then you pretty much have to follow a big part of the rules for that area. Whereas in other sectors, such as the medium-duty commercial vehicles that Brendan went through earlier, or in the school bus, they don't necessarily have that specific criteria or requirement. So in each case, that in terms of the sectors we operate in, we make sure we're aligned with what the regulatory requirements are for that sector. And as far as sort of the EV industry goes, I'll turn that over to Brendan to provide comments in terms of how we assess the ongoing changes that occur in the EV space.
Yeah, thank you, Fraser. I completely agree with your points made. The current administration is still, I mean, it's not even 2 months yet that they've been in place. And we're going to figure out here very well, I don't know about very soon, but soon, whether a lot of this stuff is posturing or some tactic to bring people in line. We are seeing this kind of concept of reciprocal tariffs and reciprocal trade policies. For instance, if, let's say, Japan has 30% tariffs on American products will be, or Japanese products will be tariffed at the same percentage coming here to the US. That seems to be a way they're going. That could negatively affect some of our, for instance, if we were selling dairy to Canada, we'd be in trouble. But or Canada would be in trouble. But as far as vehicles are concerned, reciprocal trade with Canada, I think for the same good should be okay. There's, I think, some consternation about this particular administration's approach to EVs. And I have to say, in the spaces that GreenPower is in and the products we make, which are compelling, we don't expect to have a lot of pushback from this administration because our products are much more sensible and much more desirable from what's happened in the last time this administration, or at least this president, was in power. And with the advent of having someone highly intelligent and understands the EV space probably better than most as his right-hand man and obviously a confidant and consultant, we think having Elon Musk there, there's not necessarily going to be problems for the EV space. There could actually be benefits for the EV space. So we're cautiously optimistic that some of this stuff is noise, some of it is posturing, and we don't really know the major effects on the EPA. We're relatively pessimistic for federal programs being, largesse that we can leverage. We see that typically to be better on the state level and more effective on the state level. And that's what we've been doing and will continue to do is really focus on our relationships with states and cities and places where they are better suited to really affect grants and help us sell our vehicles into their areas.
Right. The next question, what are your projected number of deliveries for 2025 and 2026? We have had a long-standing communication or position that until we reach positive cash flow and we're in a position to kind of redefine our business model, that we would not be providing projections or guidance in terms of revenue and numbers. However, I think it is appropriate to provide some context in terms of where we are today and where we've come from and kind of where we expect that to go. And I've pulled up, and hopefully everybody can see it, is the live orders and contracts. So it's a combination of those two. That same number last fall was 126. A couple years ago, it was even a substantially smaller number than that 126. So the book is grown, and in terms of the live orders and contracts, which is sort of a key first step, because if we don't have that growing book, regardless of what we need, we don't have a sustainable number of deliveries that will get us to that positive cash flow in the future. Number two is part of it also relates to the mix. And on this slide, you can see that we have beasts. We have the mega beast, which is double the batteries. So even takes a longer build cycle than the regular beast. And we have our nano beast. And the nano beast is less than 20% of the total of 197. And the reason I cite that, or that we would comment on that, is that the Type A school bus market is roughly or close to 20% of the total number of school buses in operation in the nation today, which is 480,000. So if the market's already at roughly 20% for the Type A, and we're not even at that level, there's a tremendous opportunity for us to see growth with the Type A. And the Type A school bus, we can build faster, deploy faster, and it's easier for end customers to bring into their fleet, because in most cases it's just a much simpler level 2 configuration. They've got a much broader driver pool to draw from that can drive these vehicles. So in short, this is sort of the first indicator of where we are growing as a company that gets us to ultimately a place that where we have quarterly deliveries that deliver a positive cash flow. And this is a different question, but it's somewhat a follow-on to that same question that I just covered. And I'll pass over the back half of this to Michael in a second. Question is, I'm a current investor from Central Illinois. Thank you, and we appreciate your support. And listened to your last earnings call, and it seemed like a good quarter and expected a more positive reaction. Do you still expect to reach positive cash flow this year? And I think there's, what Michael talked about in terms of the fact that we have consistently posted a gross profit is a key part of what has differentiated us from so many of the startup EV OEMs that are out there. But the current level that we're at, and the chart that showed our 12-month trailing, is down from what we have traditionally posted. And that's in part because we brought on a second facility in West Virginia. And when you do that, you have all the corporate overhead and the production costs. that you have to allocate for the number of units you're producing through the facility. So when Michael is going through our, or the team is going through our financial statements, and we prepare our quarterly and ultimately the audited annual, is the more vehicles that we can put through, high quality, producing and delivering on a timely fashion to customers, is the more that we put through, or the higher throughput, changes that dynamic and improves our GP. So just, with what Brendan was talking about on the production throughput and the plans that the team has been working on to substantially improve that going forward, is going to be an integral part of the combination of getting, a higher number of school buses delivered every quarter to customers at a higher GP. And that's the combination that gets us to that positive cash flow. And I think that, we certainly received a positive reaction from a few analysts, as well as a number of customers. But others are still waiting to see the evolution of that combination. And Michael, perhaps you can, better explain than I did as far as the, what some of the drivers are for that, that we see that will help improve our gross profit.
Yeah, I think Fraser, you did describe it clearly. I mean, I think the concept isn't, we don't need to overcomplicate it. It is as simple as increasing throughput of vehicles. Will improve that, or bring us closer to that positive cash flow number. So, in particular in West Virginia, where, we are solely focused on our Type D school buses and Nano Beast Type A school buses. As we improve the throughput there, we are going to start to see, us moving towards positive cash flow. So that's, really, I think if we can, move upwards of 10 school buses per month, that's sort of, a number that, I think is important for us, but we're not at this point, projecting, the timing or when we're going to be getting to those levels.
Next question. What steps does management believe are necessary to restore investor confidence and drive a recovery in GreenPower stock price? Are there specific milestones, financial metrics, or strategic initiatives that you see as key to achieving this? So I'll start this off and then pass it over to Michael. But Michael talked about how, with our capital structure, we have brought on some financing vehicles that are focused on or allow us to produce pursuant to customer orders. And I can't emphasize as much the transition that we've been going through the last couple of years, where if we look back, say 3-4 years ago, we would produce to inventory, and then from inventory, that would drive our sales process. And then from there, we would complete and deliver to customers. So there's a couple extra touch points compared to producing pursuant to customer orders in doing it that way. But we had to, because customers were, well, let me see your product. Let me see where, I want to touch and feel it before, I move to the next step. Now, as you can see with the live orders that we have on that particular slide, live orders and contracts, is that we're at a place where, the customers will give us an order, either based on a vehicle that they've seen at another customer where it's being deployed, or at a trade show where we've had our vehicles out for ride and drives, or dealers who have taken it out and shown customers our product offerings. So the dynamic has changed where we're producing pursuant to customer orders. And with that is a need to change our capital structure, in that our existing facility with a traditional bank is based on a combination of finished goods, a percentage of finished goods, and a percentage of accounts receivable. Well, if ultimately we're going to be in a place where we're producing all of our products pursuant to customer orders, we'll have very little finished goods. And within that model, we also have moved to where we are working with end customers and dealers where we get paid on deliveries, under that model. So that allows us to, the good news is that there's a lot, better cash flow from that arrangement, but we don't have as much to leverage. So a traditional bank line doesn't fit within that model, hence the need to transition to the production type financing where they will advance funds for supply chain payments, which a traditional bank is just not going to do. So, and the other component of the financing package that Michael's been working with is that we have letters of credit that are also guaranteed by EDC, and it's taken a while for our supply chain to really accept and buy into that. So, now Michael has more tools to work with. And going back to the fundamentals of this question is that we believe that in showing a continuing book and an increased threshold of deliveries over the next quarter or two is going to show investors that this transition is going to pay off in terms of getting us to a sustainable business model that generates positive cash flow. So, Michael, anything to add in terms of our, kind of the financing capacity?
No, thanks, Fraser. I think you
Okay.
dove into it pretty deep there. So not anything more to add.
Next question is for Brendan. What is your expected timeline to reach maximum efficiency at both plants? And what would maximum efficiency look like in terms of production?
Well, maximum efficiency is going to mean different things to different people. From my perspective, and where we're going to be at the run rate where we're meeting our sales demand, our delivery demands, and have our order pipeline consistent. West Virginia will be delivering about 300 units per year would be my goal for that location. And California would be manufacturing about the same. Now, currently, we don't have orders on the books at that level, and I don't know that we'd be ready to deliver that many if we could even build them. So I'm giving you guys my my expectations on, for instance, California. We're just still moving in our Porterville location from California, Porterville down to California Riverside. We expect that move to be completed by the end of March. GP Truck Bodies already moved over. Our Rancho administrative and engineering offices are already moving over. So now we're just porting over our production. We think that the West Virginia factory, as our workers get more trained and skilled, and we've got multiple shifts running in West Virginia. We currently started a second shift, which has helped immensely. We expect that location will be producing approximately 100 units a year sometime in the next month or so as its run rate for the beasts. And then mixing in some nano beasts, will be at about 125 to 150 total units just here very soon. Then all we need to do is add more employees and just increase the so we can double the amount of employees we have in West Virginia and not quite double the capacity what we're putting out, but at maximum efficiency, as it were, almost double the output. So we believe, and that's just for US. We still have the ability to leverage some of our contract manufacturers that we have here. And our contract manufacturers have immense production capability. So the commercial side is going to be different than the school bus side, in that there is less touch points on the commercial product. and especially the trucks. So if we got a lot more truck orders, we could easily take care of more of those with the assistance of our contract manufacturing than our school buses. In other words, scale that up to a higher number. So we expect maximum, let's say, efficiency in West Virginia by the middle of this year, and pretty much the same for our Riverside, formerly Porterville folks. And we have been able to bring a lot of our Porterville employees with us, especially the lead characters that were absolutely instrumental, and really the folks that have had such an impact on our California production. We've been able to maintain a lot of them and bring them with us to Riverside. So we have already hit the ground running and expect that to continue.
So before we get to our last question, as it is 1:15 the hour, after this last question, we'll turn it back to Craig. There are a few remaining questions, and unfortunately we won't be able to get to them. Feel free to reach out to Michael, Brendan, or myself, as we'd be happy to go through those, or any other questions you might have relating to today's presentation. So last question, actually, you get to start this off, Brendan. Could you briefly talk about the recent deal with Impact?
So Impact Energy is a battery assembly company that's based in Poland, in the European Union. They are the major battery assembly company, battery manufacturing company in Europe for buses and truck builders. And recently we've gotten together and we've really been working together on the development of a Impact manufactured battery pack that could be made in Europe or could be made in North America, US for that matter, for GreenPower vehicles. And we're, again, early days, but we see that they'd make a great partner. We could be able to have some great working relationships with service and after sales support, leveraging each other's companies in our location. And we've agreed to look at doing some work together in a co-located place. We're having a service center there, and them having a manufacturing and service center. Impact is a strong company with strong financials, and they built battery packs for thousands of vehicles. Gives them some of the most experience in this space. Really, I mean, they've been around since I got into the space in 2012. They've been in this space for a very long time.
Thank you, Brendan. Craig?
Thank you, GreenPower. Just before we wrap up, if you wish to get more information about GreenPower Motor Company, go to our special page, greenpowermotorinfo.com, or you can write us at gp@redchip.com. That's it for today's webinar. Thank you very much, everyone.
Thanks, everyone.
Thank you.